through this thing. 30 seconds.
It feels like it wants to go higher though.
Yeah, that's okay. So I don't care if it goes higher. That gets me out at 476 for the low, well above those 2 candles. So that could work.
I'm going 514.
Now we got the high.
And I'm going all the way down 463 somewhere.
Oh, here we go. In and out. All right, worked.
Good job. All right, I am not in because I went lower than that. It's a fake out as of right now.
Block this. $750 profit. 51,311. I didn't even see it. I was trying to put in my long. Where are you at?
I'm still just waiting.
Oh, you're lower. Wow, you're good with these levels, man. You're really good with these, guessing these levels of where it's going to bounce or it's going to go through. That's nice.
That's the idea. We'll see if it works. Here we go. In.
Here we go now.
And come on. There we go. All easy. Easy peasy.
Beautiful.
But see, that's what I'm talking about.
That's
when
so
you get
funny.
those key levels, when they break, you're just looking for 15 ticks. You're not looking for some crazy move. But look, it went right to that line that I drew lower, and it's trying to bounce. That's what it's all about. You just got to find these levels, and you got to take advantage of them.
That is really nice. No, what's awesome is I saw that move on my computer, and then if you agree with that thought process?
Yeah, I actually 100% agree. Believe it or not, me and Methodical were talking a lot about this morning, and he's on the same page as you with that. And I don't disagree with either of you. I have just found that I like the key levels better. Instead of, I don't want to assume, I'd rather like go to where I can find every single day. Like if I look for key levels, I know where to look. When you're doing what you're looking at, you're essentially finding those key levels, but then you have to pick an area based off of that, like trying to front run it. You're just trying to front run it where I'm trying to look for the orders going the opposite way. I don't know. The reason I don't like it, like if I'm just being honest real quick, is because like I told him, if you have the market and you have like a big buyer, a big seller, in this case, it would have been a buyer. You don't know if he doesn't want this to go low a day because it would show weakness. He's going to step in somewhere before it gets to low a day, and you have no idea where that's at. So you're kind of playing with fire there. Where if you're always above or below the key level, the odds are they're not trying to stop it from continuing that direction. Does that make sense? Unless it's one of those overlapping candles where they're sucking up liquidity right under the current level, which is why I go beyond those levels to avoid that, which I've obviously proven happens quite a lot.
Yeah,
that's
totally
my
makes
theory.
sense. Totally makes sense. I just felt like
no, I agree with you. No, I don't disagree with your trade. It's just it's a different way to take the same trade. I'm not telling you your trade's wrong. It's not. It's how you interpret the best way to trade it. Look, the only thing I've been saying this entire time is I want you to find a way that fits you and your personality, but using that opening candle. Because that's all this is. I'm not saying my way is right and your way is wrong. I'm not at all. I'm actually saying find the best way for you to use that opening candle, because that is the edge. The edge is that opening candle. If you can figure out a way to interpret it into a trade for yourself, that's all that matters. Because I'm showing you how I trade it, doesn't mean it's the right way to trade it, or the wrong way for that matter, right? It's just how I trade it. But we're all doing the same thing. For anyone that's kind of following along, we're trying to use that volatility of the open just to grab that small amount of ticks every single day.